Stocks, oil prices and safe haven bond yields rose on Tuesday as a tentative market rebound picked up pace after China cut interest rates and banks' reserve requirements to kickstart its wavering economy. The dollar motored ahead against most major currencies, rising 1.4% against the yen and 0.65% against its currency basket as the stimulus boost to the world's number 2 economy gave impetus to the case for a near-term interest rate hike in its biggest. Global markets were pummeled on Monday, with Chinese shares falling 8%, prompting investor calls for remedial action from authorities that grew louder overnight after the Shanghai Composite Index slumped a further 8%. Economists said Tuesday's response, a 25 basis point cut in key rates and 50 bits per second off the reserve requirement rate for large commercial banks, sent a clear signal that Beijing, which has stepped in several times this year to keep China's high-powered growth on track, was still willing to intervene. But as asset prices eased back following the initial euphoria, some question whether the measures would help. Investors have been waiting for them to act, and they have, said Callum Pickering, senior economist at Berenberg. Is this sufficient? It might not be, but it does set a precedent that they are engaged and looking to prevent any further declines. As the previous day's rush for safety reversed, German bond yields also rose, with the 10-year benchmark up 11 basis points at 0.69%. Yields on safe haven U.S. Treasuries were also up by 1,200 GMT. Wall Street was indicated up 3.6%. The Pan-European FTSE 300 index gained 4.4% and MSCI's benchmark emerging stocks index rose 2.4%, its biggest jump in 2 years after 7 days of back-to-back falls. The BOC, central bank, is doing what it has to do, but it is very likely it is not enough, so more will have to be done, said Wai Yao, China economist for Société Générale in Paris. A bit of panic. The stock market gains in Europe, which recouped the bulk of the 5% plus loss the previous day when around €450 billion, $520 billion, was wiped off the FTSE 300's value, were also supported by takeover news. Swiss agricultural chemicals maker Syngenta bounced 9.0% after a source said Monsanto had sweetened a takeover bid, and British insurer RSA gained 4.7% after an offer from Zurich Insurance. With China the world's biggest consumer of commodities, crude and metals markets also responded, albeit relatively modestly, to Beijing's move. U.S. crude futures traded at $39.40 per barrel, up 3.1% on the day, while Brent rose 2.9% to $43.91. But global oversupply and worries over the severity of the slowdown in China kept oil prices near the 6.5-year lows they fell to on Monday, when the market slumped 6%. Copper, often considered a proxy for global economic activity, rose 1.65% to $5,038 a ton. In China, where recent market volatility has been at its most extreme, the central bank's policy move, coming on the heels of a shock devaluation of the yuan 2 weeks ago, drew a guarded reaction. This is a big bang move. Frankly, it shows a bit of panic in my mind, said Andrew Polk, resident economist at the conference board in Beijing.